Then next subheading is deferred tax liability. I already said to all the tax, because when you assessing the income profit of the company, we are following the rules and regulations of the Accounting Act. Okay, but when income tax authority calculating the profit, they will follow the Income Tax Act. So as per the Accounting Act, when you assessing the income, that income as well as income tax authority assessing income will be different. So if you are assessing accounting income is this amount and income tax authority assessing income is different, there will be variation will come, right? So then taxable income, that is income tax authority's income, is more than the accounting income. The excess amount is our liability, company's liability to pay back to the income tax authority. That liability we will call the name deferred tax liability. Okay, so this keep in mind. The income tax authority assessable income is more than the accounting income which we assess according to the accounting rules and regulations. There is a difference will come. That difference we have to pay back to the income tax authority. That is known as deferred tax liability. This is not in our syllabus, but still just to know the meaning. Okay, now when you come to the next topic, other long-term liabilities. In other long-term liabilities, we have to write some items like premium payable on redemption or debenture. When you pay back debenture holders money back, at that time along with the face value, sometimes we will agree to pay excess money than the face value. That excess money we are paying is known as premium payable on redemption of debenture. Same way preference shares also, excess than the face value. If your preference shareholders principal amount we are paying back, then it is known as premium payable on redemption of preference shares. Redemption means repayment only. When you repay the principal amount more than the face value, we agreed to pay to preference shareholders as well as debenture holders. That amount we will call the name premium payable on redemption of debentures, premium payable on redemption of preference shares. This kind of items are coming under other long-term liabilities. So keep in mind, premium payable on redemption of debenture, premium payable on redemption of preference shares will come under the heading other long-term liabilities. Then long-term provisions. Long-term provision means you know that employees, for employees benefit or retirement benefit, we are maintaining any provision for retirement benefit payable to the employees. That means employees provident fund. So this we will write in long-term provisions. Its nature is more than 1 year. That's why it is including long-term provisions. Then provision for warranty claims. Any warranty claims provision if you maintain, that also will come under the heading long-term provisions. So remember, any retirement benefit to the employees, that is employees provident fund, EPF, and provision for warranty claims, these main items are coming under the heading long-term provisions. So it's a final amount we will show in the main balance sheet. Now we come to the main heading, current liabilities. Current liabilities, first subheading is short-term borrowing, right? Short-term borrowing means any borrowings is time period is less than 1 year. Example, bank overdraft, cash credit from banks, short-term public deposit. Normally public deposit is coming under long-term borrowing, but it's a time period is short-term, then it will come under short-term borrowing. That is short-term public deposit and short-term loans from other parties. If you are receiving loan from outsiders, that time period is short-term. Short-term is less than 1 year. That also will come under the heading short-term borrowing. It's a total amount we will show in the main balance sheet under the heading short-term borrowing. Then when we come to trade payables, next subheading is trade payable. Under trade payable, two items only coming, that is creditors and bills payable. I don't think so explanation is needed because we studied in detail in 11th standard what is creditor, what is bills payable, and two items only coming in trade payable. Trade payable means it is both creditors and bills payable. So creditors and bills payable amount we will total and show in the main balance sheet.